What's up, fellas? It's your boy Juan back at it again with another video here for the compound. What I will be going over today is Fibonacci retracements and how I use them intraday to go ahead and look for entries, for targets, for you to be able to snipe these targets and be able to go ahead and take profit on the way to the profit target, So first I want to go ahead and base off of what I use or how I use these fibs, right? For upside, you're looking from the top to the bottom, so from the high to the bottom. This is how I am looking for. So the reason why I'm looking for this is, so let's say you have that impulsive move, right? You have the impulsive move. That's where you want to point the points at, right? You want to see this is an impulsive move here, an impulsive move here. So you want to get the retracements off of this impulsive move for continuation, right? All right. So for instance, here we have the high, we have the bottom. So now we're looking for the retracement to come down to this fib. This is what you call the golden ratio. It's the 0.50 and the 0.618. It's a lot of mathematical terms that come into this, but I'm just going to call it the golden fib ratio. And then so once you get that retracement, or you can either get a retracement, a pattern here within this zone, especially if you get a pattern within this golden ratio. It does give me a little bit more boost of confidence for me to be able to take that pattern. Let's say you get like a triangle, right? Take it to the upside at the golden fib ratio. And where you want to go ahead and target is the 1.272. Of course, you don't want to wait till you get all the way over here, right? But you can begin to start scaling out. And essentially what this is doing, and this is creating, for instance, on an uptrend, you get that, let's say you get that change of character, right? This would be that higher low for you to continue to the upside, and this would be that break of structure. I'm not going to go too much into depth into market structure in this video. It's more Fibonacci based, but just so you guys can get a concept of how I look at this as. And that's the reason why I'm able to go ahead and really get these calls almost to the cent in regards to where the targets are going, because I combine them with market structure, and I'm able to go ahead and capitalize on the actual movement. So let's go ahead and, so this would be for, like, let's say for the upside, and it's the same thing for vice versa for the downside. So let's go ahead and take a look at some examples here. I already have a few set up, but for instance, this is going to be the first one that I got set up here, which is this one right here. I will go ahead and take out the points. So let's say this was pre-market. This was an actual play that I did go ahead and also take. So let's say you have, right, you have the top, you have the bottom. That's a move itself. So you're wanting to go ahead and grasp this high to this bottom here. And the way, for instance, you have with confluence already of a actual break, right? You have the actual break of this trend line. You have VWAP and 200 EMA right here, right? So the way that SPY works is that what I've been noticing a lot is that breaks around this, the VWAP and 200, do end up paying more often than not when it does come to this. So this is how you use it as confluence. You just can't plot two random points and expect for this to work, right? It's an art when it does come down to the actual fibs of how you plot them. But for instance here, right, you got the top point, you got the bottom point. You're looking for that retracement and for it to hold that golden fib ratio. Once you look for this, you're looking at this as a flag. You're seeing that it's being faced and held at the 200 EMA. VWAP, you have I apologize, the 9 EMA above the 20 EMA. So this is all giving me bullish confluence, right? And then you have the break of the actual structure, the trend line to the upside. And you're beginning to look for this 1.272 target. So this would be that first example you're looking at. You have that base, that flag pattern at the golden fib ratios for you to be able to go ahead and take upside continuation. Now let's go ahead and look at a downside, right? All right, so how do you look at this as a downside play? It's same thing. This is just a glimpse, but I will go ahead and erase this. For instance, you're looking, so you already have this movement from this pattern, correct? So now what you're gonna look is you're gonna plot from the bottom to the top, vice versa. So from here's for upside is from a high point to the bottom point, and take it to the upside. And for downside, it's vice versa, from the bottom to the top point. You're looking for impulsive moves. to get the retracement, right? So here, for instance, you do have that break, and you see exactly here where it's also basing and holding. We're looking for a bear flag here to take to the downside and target the 1.272, where it's exactly where it's being held. So you're looking for these impulsive moves. You got that confluence of the break to the downside. So you're going to look for continuation. You have the 90 EMA below the 20, which is also giving me bearish confluence. And this does also work on, for instance, if you want to pull up a 3-minute chart, it'll be the same thing. It'll give you that same retracement in this area for you to be able to take it to the downside. But all these examples I will be showing to you on a 1-minute chart. So now that you have this here, for instance, you took the upside, now you got the bottom one. So you boom, look exactly where it does go ahead and target, right? So this would be that end of the move. You would want to begin to scalp within, take your profits within this area, right? You take the flag break, you start scaling out to these bottom demand zones. But essentially, you're looking for this 1.27 to go ahead and hit target, right? Let's go ahead and take a look at another example here. Erase this very briefly. And this would be another upside continuation, right? So you have this huge break, you have this huge trend to the downside, and now you're looking for continuation to the upside. In regards to using fibs to the upside, later on in the video, I will show you guys a trick as to how I use them when it's below the 200 and VWAP. But for this example here, I will be showing to you guys how it's meant to be here. So for instance, let me go ahead and get that one out the way. So for instance here, right? And like I was saying, this is all in art. In regards to how you decide to go ahead and use with these fibs, I do fairly recommend for you guys to go ahead and back test these first prior to even going ahead and using them in actual live trading so you guys can get a glimpse of how these are used. But essentially, once again, right, you have the impulse move to the downside here, and now you're looking for a golden fib ratio to be held and retraced upon for you to go ahead and take it to the 1.272, which is up here. And you have the 1.618, the 2.618, the 3.618, and the 4.236 for this potential targets, right? You're not looking for all of these moves, right? But hey, it does happen in instances where these do keep on going to the upside. But for instance here, right, you have VWAP and 200 EMA, which is already a huge magnet when it comes to SPY. So like I was stating in the examples, right, you're looking for the retracement to be held at the golden fib ratios, which is the 0.50 and the 0.618. You have confluence of the 200 and VWAP. You have confluence of the break to the upside, the 9 EMA above the 20, which is also already a great setup for, in my opinion, when it does come to upside breaks. And so now once you have that flag break to the upside with confluence, you're looking for that 1.272, correct? You're looking for that retracement to that golden fib ratio and take it to the 1.272. And then you see right here, back again. I'll show you another example here where I already see it, but let's go ahead and take this one down. Give me a second. This is another fib that you can go ahead and use, right? So like I was stating earlier, this is an art. You can plot them at different levels. But for instance here, you're looking for that retracement of this impulsive move, right? That's a healthy pullback. A healthy pullback is within this, right? Once you get down here, it's already looking as a continuation to the downside, but a nice pullback is to the 0.50, 0.618 golden ratios here. So you plot them. Let's say, let me go ahead and erase these. You're plotting it from this high, because we're looking for continuation to the upside, right? So you're plotting them from top to bottom. Yes, you're not pricing them to here, but you're looking for this impulsive move, right? So you have this impulsive move already marked. You have the high, you have the bottom. Now you're looking for this pullback right to the golden fib ratios, which is exactly where it retraces, and then you can look for continuation to the upside. So if you plotted them over here and you plotted them here, you still would be ending up getting around that fib ratio, because this would be a nice pullback to continue to the upside, right? Let me go ahead and so for this here, these would be the examples that I would like to go ahead and show you for this particular day. Let's go ahead and take a look at a few more examples. Okay, perfect, guys. Let's go ahead and take a one last few example here. on this date here, let's say you have that break to the upside, I apologize. So you have your trend line, you have your high, you have your bottom at VWAP at the 200. So what you're going to essentially do is plot this high here. So you're looking for the retracement of this move. So you're plotting the high to the bottom to get that retracement to take to the upside, right? So that's exactly what happens here. You get that another flag right at the golden fib ratios, holding with the EMAs, and you're taking it to the upside to the 1.272. And look exactly how it's being resisted at the 1.618, which is the 422 and 44 cents here. But essentially, you're just going ahead and start scaling out before you get to the 1.272. Let's go ahead and look at a few more. So here we are continuing to the following day here again, once again, SPY. So I just want to go ahead and keep this in mind for you guys. So for instance, as I do explain it a lot in the Discord, when I do see upside moves underneath VWAP and 200 EMA, I am looking at them more as just as a pullback on a higher time frame rather than continuation to the upside. The moment that I begin to look for upside continuation more is once it is crossing over the VWAP and 200 EMA. So just keep this in mind. So for instance, an upside break here is I'm just being looked at as a pullback rather than actual continuation to the upside. So for instance, sometimes it's like, hey, how much is that pullback actually going to go, right? For instance, so one way that I do like to go ahead and use this as is with fibs, right? What you can do is you have this impulsive move here. So you're plotting that the bottom to the top because you're looking for downside continuation. So for this is how I was explaining earlier in the video that if this is all in art, right? So for instance, for upside here, for fibs, you're looking from the top to the bottom, right? So for instance, if we're looking for upside here, we would be plotting this to the top to the bottom. But what happens here? The reason why it's not actually going to come up and then retrace to the 0.50, 0.618 to then hit the 1.272 is the reason for of that 200 and the VWAP, right? Upside are just pullbacks if they're underneath, and if their upside breaks above the 200 and VWAP, then I am looking at them as more as continuation rather than actual pullbacks. And so here is one of the actual few things that I noticed while back testing these fibs. I noticed that if I plot them as to go to the upside, I wouldn't really get that retracement back to here because it's not really the actual side that it's going, that SPY is choosing to go. Because SPY is below the 200 and below VWAP, it's more downside and bearish continuation rather than bullish continuation here. So for instance here, right, back to how I was looking at how far can this retrace? How far can this actually break to the upside as essentially a pullback on a higher time frame? Is plotting these fibs. You plot them from, you have that impulsive move to the downside. You're plotting them from the bottom to the top because you're looking for downside continuation. And look where it does go ahead and stop. It stops at the golden fib ratios to then continue down to the 1.272. It doesn't necessarily hit it exactly, but you can definitely begin to scale out here, start scaling out here. You know, you're targeting essentially this fib here, but what you're actually doing is just scaling out before you actually get here. So this is just something that I wanted to show is regards to how far can it pull back as. For instance, let's say it does cross above the 0.50 here and begin to the upside, then you can actually begin to start looking at it as upside continuation. But most pullbacks, if it's underneath, it would go ahead and stop at the golden fib ratio and then continue down. And I will have a few more examples later on in the video. But for instance here, right, let's go ahead and take a look at this date here. So for upside, we have this here for this first fib, right? You're noticing that you have this falling wedge being formed here. So you have the falling wedge. You're looking for upside continuation. You got that first point, second point, which is from the high to the bottom. Here you got that break to the upside. You have the 90 EMA above the 20. You start seeing it base around the VWAP and 200 EMA. And look where it's also being held at. It's being held at the golden fib ratios right here. So now what you're going to look for is for it to hold this area here essentially for you to be able to take upside continuation, right? So for instance here, you're seeing that it's a flag to the upside. especially once it's at the 200 EMA and VWAP. SPY does like these breaks to the upside and to the downside as well. But for instance, here we have confluence for upside continuation. So you're basically just targeting the 1.272. And you're also targeting that 1.618. You're not necessarily looking for it always, but here you are actually getting it. Now let's go ahead and take a look at another example within the same date. Here once again, right? So for instance, how I was explaining in the previous example, you're looking for this impulsive smooth retracement to the downside. So you're looking for this retracement, healthy retracement, to continue to the upside. So let's, once again here, right? You're plotting it from the top to the bottom here, from this bottom. Look exactly where it's being held. It's being held and respected exactly at the golden fib ratios. So that's already given you confidence of this level being held as a strong level. Now you're looking for this to hold. You can potentially take this flag break to the upside. You're looking for change of character and continuation to the upside within this smaller frame here. So now that we have this example here, these are just a few that you can use these fibs as. And let me show you this very last one for this date, which is this fib here. Let's say you're looking for continuation to the upside, right? Like I'm stating, fibs are used to look for the retracement and for a healthy pullback to continue to the upside. So here, you're noticing you have that top, you have the bottom here. Now you're looking for that retracement here for you to be able to take to the upside. So now that you have this impulsive move, you're noticing that this is an actual flag here to continue to the upside. It's being respected, the 9 EMA. The 9 EMA is far from the 20 EMA. So now you're looking for it to start holding this fib ratio to continue to the upside. And you can see here, once it hits the top of this level here, it comes back, retraces exactly at the golden fib ratio for you to take continuation to the upside. And you can begin to see that here it's being held. So here I don't have any support or resistance lines, but I do have these fib lines. And you're noticing exactly where this congestion zone is. This congestion zone is within these fibs. So you can also use this as for resistance and support levels as well. And look exactly where it hits. It hits the 4.236 up here. A nice liquidity sweep to continue to the downside, right? But here, essentially, this is how I would be using fibs within this time frame. Let's go ahead and take a few more, and then we should be able to go ahead and have a very good idea of how to use fibs. All right, so now we're here at the last date here of the examples that I'll be going over. And how I was explaining in the previous examples, when you're looking for upside continuations, if you're using fibs, this is all in art, correct? So the way, for instance, if you were to look for continuation, let's say you have this upside break here, you're seeing upside. But the reason why this wouldn't essentially work here is because you wouldn't necessarily have that impulsive move to come up, retrace back down to the golden fib ratio and continue. So what's the best way to use fibs in this scenario here is to look at it more as where resistance can be held, right? For continuation to the downside. So here you're just switching it. So here what you'd be doing is looking for that bottom point to that top point and look exactly where it's being held at. So this is how you can sort of have an idea or glimpse as to how far will that pullback essentially be, right? Because this is essentially just a higher time frame pullback, but on a 1 minute, this is like, for instance, a break to the upside. But essentially, this is just a higher time frame pullback. So let's say you have this, here you have this rising price action here. You're noticing that, hey, look, it hits the 200, it hits VWAP, but what does it also hit? It hits the golden fib ratios, the 0.50, the 0.618, to then come back down and target the 1.272. And I do understand that some also in the actual chat were actually taking this play here. They got the rejection off of this fib, and they were scaling out, heading towards the 1.272. So that's one example of how you can go ahead and use that here. Another one would be, let's go ahead and show you this one example here. Let's go ahead and continue here with another example here. For instance, here you're noticing another upside break, right? Boom, you have the 9 above the 20. This is how you can tell how far this break is going to go to the upside, right? You plot another one from the bottom to the top. You have that bottom point and that top point. Look exactly where it's being held. You're having that downside break exactly happening at the 200, happening at the golden fib ratios to then target the 1.272. And look exactly where it hits, right? That's what you're looking for. You're looking for that retracement to come back. So you're looking for this impulsive moves, the retracement to then continue to the downside. That's essentially what you're looking for, right? If you were to look for upside, and you were to plot this, you wouldn't really get that move because you don't have that retracement up to then come down and then continue to the upside. That's the reason why if you combine this with market structure, this is a great tool to use. Let me go ahead and use this last example so you can see it. Once again, right, you have this here. You have this break to the upside. Look exactly where it's being held at. You're plotting from the bottom to the top to continue downward. You have that 200. You have the 20 above the 9 here, which is just confluence as telling you like, hey, this is bearish continuation. You see exactly where it breaks to the upside to. It holds the resistance here to then continue to the 1.272. It hits the 1.618, and it even hits the 2.618 over here. And these are just a few ways that you can go ahead and use these fibs. For intraday, you can also use these for higher time frames, but these examples are just on the 1 minute. Thank you once again for checking out this video.